number one thing a person can do to get rich fast, I think, is develop the most unique skill set you possibly can and get or create equity in as many companies as you possibly can with that unique specialized skill set. How does this work again?
Let's keep that. Let's keep that in there. George, keep that in there.
Our intro. We don't need to do an intro.
No intro. Welcome to episode 39. We are back to talk about how to get rich quickly. Sounds like a spam headline.
Sounds like scam.
Yeah. Might be the next scam pump. You might be part of this. Hopefully there's some alfalfa in this episode for you. We're going to be sharing some wisdom, going around the table, talking about our paths, how our thoughts around this whole idea have changed throughout the years, and going into some of the kind of latest ideas we have around this whole concept of how to accumulate wealth as quickly as possible. I do want to start and kick off right before we do this Alfalfa Round by just on our behalf saying just how grateful we are for everyone listening. This has been one hell of a journey, and every once in a while, we just want to pause, say thank you. I know we have a great fucking time here, and we mess around a lot, and there's all kinds of degen things happening, but seriously, deep in our hearts, we are so grateful that we four friends get to hang out, get to have the discussions that we would have anyway, record them for you, and the fact that there is value to you at all and that it's making a difference in people's lives means a lot. So thank you. We're growing and shit seems to be working, which is amazing. And it's thanks to you. So thanks for shilling the pod to your friends and family and coworkers and sisters and husbands and wives. And let's keep doing that because we are getting closer to our goal of getting to a point where we're professionals about this and maybe getting some sponsors that we like that can help us support keeping this podcast going, get some staff, get some things off of our shoulders so we can focus on what we do best. So yeah, keep shilling the pod, everybody.
Can I say that I got a little emotional when I think it was user Trunsky or something in our Discord introduced himself, and he's like, "Yeah, I just never felt like I found a group of guys. It's like my crew." And then he was talking about us, and I was like, "Oh my god, like this is actually meaningful work." I started getting a little emotional.
Yeah, there's so many of those. So for those that don't know, we have a Discord. That's where our community hangs out. It's at our website, alfalfapod.com. Hop in, and there's a channel of introductions of people all around the world introducing themselves, talking about who they are, where they're from, what they do, and their reason for tuning in. So hop in there, and we'll see you in there. So thank you again. Let's kick off with our Alfalfa Round.
Okay.
The algo.
I'm not even good at math.
Mr. 17 years of Kumon.
Yeah. Well, my arithmetic is strong, I'll tell you that. All right, so the big bag of cash is still in cash. Didn't make any moves. I guess just in general, my head's at, I still think we're headed for a hard landing. I think Fed's going to tighten more than the market thinks, going to raise more than the market thinks. The market, I think, has misinterpreted some of the Fed statements and has kind of lowered the risk premium for risk assets. Obviously like LARPing as a macro person, but to me, this is the question, like what is the Fed going to do? And the market is deciding that they're gonna give up a little sooner than they're saying. I think the question isn't like, has inflation peaked, but how long will it take to go down? And I think if we start to see a lower inflation print and people say, okay, it's peaked, but the next question we're all going to talk about was how fast is it going to go to 2%? I just think, if it gets down to the 8%, 7%, what happens if it stays at 6, 5, 4 for 6 months? What happens then? Does Powell say, okay, 4% is fine, we're going to, just get rid of our debt that way, inflate away our debt? Or is he going to stick true to his word, which is we want to see multiple months of evidence that we're actually going down to 2%. And so, this thesis has some holes in it. If, I could be underestimating how political the Fed is as like a group, that we have an election coming and maybe they do want to, inflate away the debt at some point in a strategic way. But I'm not buying it. I'm not chasing the pump. We could go up higher, but I'm going to keep my bags in cash for now.
It's good. I have a lot of thoughts on this, but I'll I'll keep it in my pants.
Why don't
for a
you
bit.
just go next?
I feel like we'll do a little thing. We'll have a little brief discussion on this. I
Okay,
feel like
yeah.
it's a good point of.
I'll go next, and you can piggyback off both of us. But I'm sort of with Nick that I'm still holding a lot of cash on the sidelines, and I'm starting to play devil's advocate a little bit because I do see this hard landing existing. But when we talk about macro, we're typically talking about inflation rates, Fed pivot, et cetera. But there's this other like macro environment that's happening alongside of all this, which is like the investment landscape, the investment universe as a whole. And what's happening like in that investment universe is like you're actively deciding at all times whether you want to deploy your money, yes or no, and then if yes, then like where. So a lot of investors typically would go like equities and bonds. This is like a kind of like a traditional allocation. And when investors are looking at these two in particular, they'll look at the earnings yield on both of them, right? And the S&P 500 has like this PE ratio, and if you invert that, it goes E over P, and that's called an earnings yield. And like one of the oldest valuation metrics is called like the Fed model, and you compare the earnings yield on stocks against long-term bond yields.
The real return or the nominal?
Nominal return.
Okay.
And right now, the nominal return on stocks is much higher than the nominal return on bonds. You can do nominal for both. You can do real for both. So what that would suggest is that stocks are dramatically undervalued today. And then you also take into account a risk factor. Treasuries are risk-free, whereas equities are risky. So they should have like a higher yield. So then this guy, Ed Yardeni, came out with his model. It's called the Yardeni model, where he instead of using treasury bonds, he uses like risky bonds. And the earnings yield on stocks is still dramatically higher than risky bonds today, suggesting that stocks are still undervalued. So I think like I agree with Nick that we could go on a hard landing, but that doesn't really dissuade me from like looking at this investment universe, this like macro investment universe, and seeing that like where would I rather put my money? Still in risky assets, maybe not now, but according to the Yardeni model, Fed model, like S&P 500 would actually be worth right now between 6,000 and 8,000 on the S&P, and right now we're at mid threes, high threes, 4.
There's some assumptions built in that, like the bond market is much larger, much more liquid. Sometimes people say that's where the smart money is, but the next assumption is that it actually is a good predictor of where things go. So relative to where bond yields are, that makes sense. But the question is, are bond yields the predictor, and are they a predictor of where the Fed will go, where the market will go? And
I think it's
that's
like
the question.
This is a long-term valuation model. Like it doesn't move there in a straight line. And my thought is along the lines of what Nick's saying is that like we're going to be in for a period of muted stock valuations for a while. But like, if you zoom out, you don't want to be buying bonds here. You want to be buying risky stuff, over a long period of time, 10-year period.
But you're still keeping your bag in cash. You're not
for
chasing.
Yeah, for now. But I wouldn't be shocked to see like a spike in risk assets. We've already kind of like seen that play out even now. But I haven't bought.
Okay.
Really.
Yeah, I think if I was a super wealthy person with billions of dollars, like long dated bonds would seem pretty attractive to me right now. Still, I think. I've been, as people who have listened to this podcast know, I have flip-flopped quite considerably starting a few weeks ago, and went from being effectively 100% cash to being balls deep in Ethereum longs. And
congratulations!
Thank you. So it's been good so far, but I always question the trade.
Was it MZY on our Discord that was the ultimate push to get you over the edge?
It was not. It was long before he existed. Rest in peace. So I sort of agree kind of with what Nick is saying, but I think not exactly. I think a lot of people still think the Fed dictates the market. The Fed does things, and then the market kind of comes along. To me, that is true to an extent in a phase of the market where we are sort of adjusting like expectations and that sort of thing. But like ultimately, I don't think there's a lot the Fed can do. I think ultimately, if the economy starts crashing, then the Fed is not going to keep tightening. They're not going to be like Michael Scott and just drive the car into the lake, and just like it's just not gonna. They're and this is what they've done in the past. Like every single time, the economy has turned and then they've like pivoted. The bond market right now is saying that the Fed is full of shit. The NASDAQ is saying that the Fed is full of shit. They went around this week. They're parading all their guys out, trying to like walk back the
press conference.
Yeah, and the market's up today. Nobody's buying it. And I don't really buy it. Like I do think as my base case, we're going to see like S&P 5,000 now.
All-time highs.
Yeah, I think we're going to go to new all-time highs. I think that we are going to hit a very nasty recession. I think it's going to be like very largely attributed to stuff the Fed is doing now, ironically. And but like from what I can tell, that's not going to happen till at best Q1 2023, maybe the end of 2023, right? And from what I've seen in the past, like when the Fed starts hiking, when the market, readjusts to these expectations, like you do see kind of nasty sell-offs, right? But then there's a period where they sort of back off a bit, things digest, and we go back up, right? And I was talking to Eric about this before we recorded, right? Like right now, what's the average like multiple of the S&P, like 20?
Long-term average?
Yeah.
No, lower, but like it used to be lower back in the day. It was like 15, and now it's kind of like 17.
Yeah. So
if you use like the last 30 years.
Yeah. So I wrapped my head around this idea that we can miss earnings, but like the multiples of the S&P could adjust upward, like long-dated interest rates could continue to move down. We could have like a pretty sick run right now before anything bad happens. I don't really believe the Fed, and like I think I'm expecting like 34 or 35K.
Doesn't
Bitcoin
this become
now.
recursive at some point? Like when you see inflation in asset prices, doesn't that like bolster the argument that like they're going to have more room to tighten and to raise? I mean, they're pretty
see inflation
flippant.
crashing. I see gas prices coming down. I see oil coming down. I see commodities crashing. I see Walmart with like inventory overflowing into like the aisles. Like I don't know. It just feels to me like we are about to get to that kind of.
Let me support this narrative. If you look back at like the Volcker era, at the end of that big tightening phase, it only took 4 months for the market to retrace all of those losses. It can happen very fast, like the bull run. After that, I'm just skeptical that this is that. I think this is kind of like a little bear market pump, but like I am aware that this thing can go quickly, and maybe I'm gonna miss the train. Maybe.
Yeah, I'll just wrap it up by saying that I think what you're saying could definitely be the case. I just think a lot of people out there are like assigning what I'm saying like close to a 0% probability with their current positioning, and they're going to get caught in a very awkward spot if that does happen, because they may feel compelled to buy back higher at the worst time possible, and then like we could go down lower than we are today, like a year from now, much lower. And that's kind of what I'm thinking.
Sounds
about
like a magnificent bull trap.
But I'm sure we'll talk about this more in the coming weeks, but I'll kick it to you, Armand.
I feel like you guys want to have like a market episode. I can see so much on your.
I could talk about it all day.
I always want to have a market
That's
episode.
all you guys want. I'm like, guys, trying to get rich quickly.
Talk about that Thursday.
Well, I'm going to take a hard left on my alfalfa for the week because it was so significant that I feel like it's worth mentioning, and it was something that's been coming up a lot in conversation in general, and that is meditation. Something that you all have experience with, and something that almost every listener out there has at least dabbled with, I'm sure, at one point in their life. I was sitting down and I was sort of reviewing like the major phases of my life, and I was trying to retrace what my habits were at those times in my life. Interestingly enough, the toughest times in my life, the most challenging times in my life, all of the best habits and attributes and rituals that I've ever had in my life, whether they be part of my morning ritual or the way I structure my day or part of my evening ritual, slowly but surely start to fall off and go missing. So I actually started even journaling about this. Maybe I'll write a piece about it, but it was just so interesting to me that when people are in tough times, one of the things I think that we fail to recognize is like taking inventory of how we're showing up and our habits. And you start by loosening up on one category, like I missed my meditation, I missed my I had 2 cheat meals, or
My workout.
I missed my workout. And then all of a sudden, each of those categories starts to fall apart and you go down into a negative feedback loop, and it's a downward dark hellhole spiral and you can't get out.
I got a question. Can we please do a life segment on meditation at some point?
We should, because there's so much to learn from each of us on
We can't
this.
be like a tech pod
Like-
and not do a meditation episode. That'd be so.
I need your tools. I need your
man.
tools.
Yeah. So I'll give a brief version of that. And what I uncovered on the opposite end of the spectrum is that the times in my life where I've been most productive, effective, joyful, efficient, and quote unquote successful from an external recognition and accomplishment perspective, which I think is just a byproduct of showing up as the best version of yourself, were when I was meditating. And I used to be a really good, consistent meditator. So for me, that meant 3 to 4 times per week, more like 4 per week, every week on average. Would usually always miss like a couple days a week, but that was really good for me. And I was extremely clear-headed, non-reactive, unemotional, and stoic to a certain degree about how I looked at life. And I looked at every occurrence that happened in my external environment as just happenings. And I was easily able to decipher what was under my control and what was not, which was actually one of Eric's insights in a previous episode, for those that remember. And what I find that it has added in the last 2 weeks that I've been doing this again, and so this week, what is today? It's Wednesday. I've done it 3 days in a row now. I think last week I did it like 4 times, and I'm kind of back on this path of like starting to make this a non-negotiable
We
again.
got a streak going, baby.
We got a little streak going, and obviously the best type of streak is an unbroken chain, which is not easy to do. And I used to feel bad about myself when I would not consistently do a good habit every single day. But instead, I just try to say, like, okay, the goal is to do this at the majority of the week at least. And it's okay if I don't do it in the morning. I'll do it in the evening. And in fact, I actually enjoy doing an evening meditation more. I was texting with Nick last night. I'm like, dude, what are you doing? What's your evening ritual? Like, I need to dial mine back in. I need to get better at as good at relaxing as I am at amping myself up in the morning and getting going. It's a very important thing that I think, especially in America, that we fail to put emphasis on. So anyway, Insight Timer is my favorite app. I've already thrown that out in the Discord a couple times, but I like guided meditations mostly. I like silent meditations sometimes. My goal is 10 minutes, sometimes up to 30. It doesn't matter. I try not to give myself a hard time about it. I just try to show up and be non-judgmental about it. And it's already made a difference. And that's what's interesting. Even like my wife was like, yeah, like that's interesting. Like you're unwinding and you're cooling down and you're not in like work mode until like 10 p.m. and then boom, pillow out. So it's been really effective so far, and I'll maybe report back on it in a couple weeks again.
Very good. I think the external validation thing that you mentioned, of like the external validation of success, is probably like leads into our next topic pretty well as well.
Sure does. Shall we?
Yeah, let's do it.
All right. So we're talking about getting rich, and
Yeah.
who doesn't love that? Everybody wants to be rich, and practically everybody. But I think the most important question to first ask about getting rich is, well, let's define what your rich life looks like. One of the fun things that I think is most funny about this topic is that most people resort to like default rich, which is the rich that is given to them by Instagram, society, and other people. And their default rich, unfortunately, is so unconscious for a lot of people that they're actually playing this game where they're climbing a ladder of success that is infinite. There is no end in mind for what is enough. I mean, I think Eric was the one, you were the one that pulled that quote out one time. I think we've already mentioned on the pod once, that quote from The Psychology of Money.
Oh, great book.
Kurt Vonnegut, I think, was the author.
Talking to his author friend, Joseph Heller, who I believe wrote Catch-22. And they're at a party thrown by a successful hedge fund manager. And Kurt Vonnegut goes to his buddy, Joseph Heller, he goes, hey, did you realize that this son of a bitch throwing this party makes more money in a day than you ever made from selling your groundbreaking book, Catch-22? And Joseph Heller goes, I do realize that, but I have one thing he'll never have. I have enough.
Indeed, man. It's a fucking mic dropper.
It's incredible.
So the first step is determining what is enough, what is your rich, and what is your enough. I think that's the most important step. And most people fail to recognize that. And I think after discussing this for a little bit, we'll go into like some of our old strategies, but like, let's go to, I mean, like what is enough for you? Like has that changed? Has that evolved for you? How do you even define what rich is for you? How does a human being even define that? Because so many people are like, I need the jet. I need $1 billion. I need to be the wealthiest person that I know. But that's like a sucker's game. Like you're going to be, I think, in my opinion, that is an absolute fool's errand. Like it is a terrible idea.
So you want to start with me? Okay.
Yeah, I do.
I'm happy to start. I have like an interesting and probably like weird relationship with wealth because I grew up wealthy, and I can talk about how that kind of played in with my ideologies. But like, I also manage money for a living, and we have clients who are wealthy, and they're like young-ish. They're about our age, and they're wealthy. And I think I see commonalities on how to get there before we talk about like what there is. I think like the commonalities I see on how to get there. It's like for people who are aspiring to grow, it's really two things amongst my client base. One, you get equity, and that's either like starting a business, which we all have done and are currently doing, and then the other one, you can even like join a startup and get equity. The other one is like eating what you kill, like sales stuff. Like if you can eat what you kill, and then you go kill a bunch, meaning like you sell and you get commissions. These like commission salespeople often out earn like the executive team, and these are like my client base essentially. So I see that as the
mine always have.
That's the commonality that I see and how to get there. For me, what I describe as wealth is so unique. It's like I am a weird guy that I don't want the jet. I don't desire really things. I am like so far on the spectrum that like I actually like eschew things. I dislike things, and maybe that's like a reflexive type of thing that I have going on inside me, where I just like take on this identity, and then I get deeper and deeper into a rabbit hole on
I've
that.
always felt as a friend that you have a very healthy relationship with money.
It's interesting. Like I think we all want more of it, right? But also like in managing money, you realize like you don't even need that much of it to sort of retire. Like I think Nick's brought up the 4% rule before, where it's like you can spend like $150,000 a year with not that much money and just maintain that baseline. Like getting $3.5 million, it seems like very attainable to somebody who's like a striver.
Yeah.
Specifically somebody who's young, or maybe if somebody's like on their way to that number, it's like, oh shit, wait for ETH to hit all-time highs again, or like fucking there. So like I don't think of that number being like that unattainable. I think what makes it feel unattainable is like you see just like exorbitant wealth, like Elon level wealth, and you're just like, oh, how do I get that? And I think people kind of fall into the trap where it's like, okay, well I have my 4 million, but it's like, well, what about 10 million? And then like they take more exorbitant risk to get to the 10 when when they were ready, and now they've squandered the 4, and it's like, oh fuck.
And I don't think we're talking about hedonic adaptation this week, but I mean, talk about the most dangerous form of hedonic adaptation.
Yeah.
Like money is the root of that.
I have a question for you. Like, I mean, you grew up around money, wealth, but you're not like the typical, I guess, stereotype for that. Like I would actually put you more on the frugal side of like how you spend your money or what you choose to spend your own money on. You're not extravagant by most means, I'd say. Do you know why that is? Like, because I've seen other friends who are, but their level of standards for
they don't value
lifestyle are like so much higher. Like their
Way
bare
higher.
minimum is
Way higher,
very
and
high.
they don't value it. And Eric really values it.
So I think you brought up this term "rich life" that comes from what's his name, Ramit, and something Ramit said, because I follow him too. Ramit says something that like spend extravagantly on what you actually desire, but then cut mercilessly on things that don't really mean anything to you. And I take that into account. So when people see the frugality, it's like, well, I just don't want any of that shit, So I just spend zero on that. But then if it's like we want to go take a trip somewhere, I'm like down every time. Yeah.
Right.
So that's what I value. I think I brought up this like duality of how to get rich, which is like equity or sales, and I'm really ignoring this third category, which is what my sort of like wealth, my lifestyle wealth is all based on. Like my mom worked at the same company for 35 years from the bottom, and then ultimately became CEO of like a Fortune company, and that is not the path that I see today, but that's certainly a path. I lived it, I saw it firsthand.
Can we break this down a little bit into more of an algorithm that Nick would like?
Nick's already broken it down.
Okay, so here's how I see it, right? Like step one is you have to decide what rich means to you, right? Does rich mean I want like a lot of money, or does rich mean like I want a lot of time without stress, right? Do I want to meet like a certain threshold for my lifestyle, but then I just want to be free, right? Those are two very different goals, right? And they require very different strategies, right? So if your goal is like, I want to be like really, really rich, I want a lot of money. Now I may think that that's a counterproductive goal, but like, let's just ignore the philosophy of that, of whether that's like good or bad, right? If you want to be really, really rich, you need to turn your money over at like an incredible return rate, right? Like, so I crunched some numbers on this, right? So if you're 21, you have $1,000 and you want $5 million by the time you're 40, right? You have to basically like add $1,000 a month in savings and then grow at like a 25% IRR, right? Which I think is doable if you are a hustler and grow a business, right? That's your path to 5 million from basically nothing. You can also take like a sort of more grindy approach. Like if you don't want to be insanely rich, but you want to be very, very comfortable, right? Start with $1,000, average like 8,000 a month in contributions, get like a pretty cushy job. You're not going to make $1 million a year, but maybe you make like 200 or 300K a year. You save it. This is like the dentist path we've talked about. You get a nice, very high paying job. That's your ceiling, not getting the jet. You do that for till you're 40, boom, $5 million, right? Then there's another path, which is not necessarily like kind of growth savings focus, which I think is like more just like cutting costs focused, right? And this path I think is really interesting to me for people who are like, I don't want to be phenomenally rich. I can live off of $20,000, $30,000, $40,000 a year. I just want to be free. And maybe that doesn't even mean like I don't want to work at all. It just means like I don't want to have to work 40 hours a week at a job I don't like. And I think this is like an interesting path. This is like, have you guys heard of Mr. Money Mustache?
Oh yeah.
Mr. Money Mustache, I don't follow
G.
anything that he says.
Yeah, I don't follow anything.
Like
I literally couldn't cut my expenses in half if I tried.
Like full
No way.
disclosure, I have opted for the path that says, okay, I could do all this cutting or I could just make more money.
Same.
Like I've opted for the path
Every
of
time.
let me just figure out how to make more money. If you're not like an entrepreneur, that's not a good path for you though, right? Like you may want to be like, I want to work a job. I want to move up the ladder. I'm good at this thing. I don't want to take on all this risk. I want to follow this path from 21 to like 37. And then I just want to opt out and I want to go do my own thing after. So Money Mustache is like really great for that type of person. Like he advocates for saving, I think like at least 50% of your take home, right? Up to like 70%, like pretty extreme. And I think conventional wisdom was like telling people like 10, 15%, right? But it's kind of remarkable. Like if you run the numbers on this, right? Like if you make like 75K a year average from the time you're 21 to 37, which is not that hard in the US as an average across like 16 years, right? You can have 1.1 million by 37 just by saving that and cutting stuff and just not doing dumb stuff. And like for a lot of people, that's amazing, and you're chill, you're free, right?
Particularly if you don't live in San Diego, San Francisco,
California,
New York, Hong
yeah.
Kong, Vancouver.
London.
Yeah. Like, so
Yeah.
I'm curious what you guys think are like the biggest leaks people have. When we play poker, we talk about leaks, or things you do that like cost you money over and over and over again. You got to plug those leaks, or you start losing eventually. Like I know he would say like the biggest leak people have is around like cars and transportation. Like biggest hack is to live close to where you work and take public transport and bike, and not I see so many people spending like $500 a month on a BMW and another $250 a month on insurance, and spend like $9,000 a year on their car, and they don't make like $1 million, and that's like an insane like compounding leak to me. Like that seems like priority one. Don't do that. Like, well, what do you guys think?
It's a good
are like
question.
The largest mistakes.
My leak is really obvious, and it's like an intentional leak. It's travel. I've easily spent 7 figures in travel. I mean, easily.
I wouldn't say that's a leak, though. Okay, so let me redefine leak, because
Yeah.
I think the end goal of money is sort of freedom, but ultimately it's like I want to be happy, right? So I think that spending money on travel for a particular type of person wouldn't be a leak, because it is genuinely giving them happiness.
But it is if my goal is true. Like, I still want the money mustache outcome, but at the whatever, a multi 6-figure level of passive income, right? So the more I can sacrifice, the faster I can get there. And yet so many of us make intentional decisions to defer that because we're mortal. And we, as you said in the beginning, like, you'd rather not sacrifice certain components of your lifestyle. It's really hard to do that. So I'm not sure the exact definition you were going for there, but I know for me, like, I intentionally choose to spend money on things that make me happier, knowing that it's going to take me longer to get to certain outcomes that I have. But in a weird way, I'm okay with it. Like, I obviously am okay with it. I'm not doing it accidentally. So that's an odd balance too. So it's like, if your goal really is to get rich quickly, again, you have to go back to the goal. What does rich mean to you? And like, for me, it is freedom. It's not this like just make as much money as possible to spend as much money as possible. That's like a form of slavery to me, like that literally. So sorry if I detoured that, but like,
No, I don't think it's a detour. I just don't think like spending money on travel is necessarily a leak if you're just doing the thing that the whole point of why you are trying to get wealthy gets you to anyway. Along
yeah,
the way.
it's like that's exactly it. I think about it as like the Mexican fisherman parable.
Yeah, I guess like, do you agree that like cars are like the biggest leak people have when they're younger?
I think cars can be if it adds to your fixed costs. If you want to buy a car, like a luxury item, like something more than just your basic transportation, then you should pay for it in cash. Like, you shouldn't increase your fixed costs. I actually think the biggest one is typically like rent or housing is where that to me is the biggest leak, because then you introduce this fixed cost that raises your monthly nut that you have to cover. And that is, I think, tougher to deal with. I mean, they're usually more permanent decisions. So I think when people have years where they do well and they increase their fixed costs, and then there may become a stretch of years where you don't do as well, I think you get ahead of yourself there. And that's like a leak. That's a hole that you found, because like income and wealth does not increase in a straight line. It just doesn't,
I think I found the answer. Like, as I was listening to you guys, I think I got it, because like, to Armand's point, it's not a leak if you enjoy it. If that's what you want to do, it's not a leak. So I think the leak is spending on things that give you external validation from strangers. A car could be one. Your lodging could be one. A Rolex could be one.
Shoes,
clothes, designer
It's
shit.
like the shit Gary Vee tells people to chill out about.
So I think like if you're buying that because you think people are going to like you more and you're doing it for external validation, then that's a leak. But if you're doing that because if you want to buy the biggest, baddest TV because you want to sit in front of that thing and that's what you enjoy, then that's not a leak. But if you're doing it for the external validation, then it is.
Can I devil's advocate this?
Yeah.
I think in some weird, perverse way, like when you're younger, a car can actually be a better investment for you, or even an investment like than like an apartment, right? Like
I'm shaking my head at Steven as he's.
you are
yeah,
shaking
sorry.
it, right? Like okay, so
It's a Steven move. Don't do that.
so hear me out. When you are younger, one of the most critical things I think that you can do is sort of like build a network and make connections. I think it's like a lot more valuable than money when you're younger, like infinitely more valuable than money. One of the nice things about cars versus like an apartment is that it's like it's way easier to flex with a car than it is to flex with like your housing.
Oh man, first of all, I just want to stop you there because like if somebody's flexing their car on me, I'm immediately discounting them from my network. So like what you're describing is like a way to network, and like we have a good network, and I drive a fucking 2001 Acura. I don't give a shit about a car. So like if somebody comes up with a Lambo expecting me to now respect that they have a Lambo, I'm like, fuck off.
I think I sort of agree with you, and I don't behave this way, but I think we would be ignorant to look at the world and say like, oh, nobody
I've
What if
cares
that
about
car?
these things.
What if that car is akin to what travel is to me?
That's what I was saying. If you enjoy it, it's not a leak.
I'm not even
Okay.
talking about it as like an enjoyment. Like let's get away from cars even, right? Let's talk about something we've talked about before, like something I don't know if all of you have done this in your past, but like I certainly used to go to a lot of nightclubs as a youngin, and I spent
Nightclubs as a youngin.
ungodly amount of
Well,
money.
hey there, bud.
Yes. Used to go to the discotheque with my friends and just party
Half
down.
naked girls dancing all over you and ordering champagne, Steven? Is that what you were doing?
I don't know what you're talking about.
No,
Can we go into detail?
Nick definitely didn't do any of that.
Who did it better, Nick or Steven?
I don't know. I
of
spent ungodly amounts of money. I will
Fortunately, I
say,
didn't know any of you then. So.
yeah, thank God we weren't teammates back then. Because
I've done it with Nick, haven't done it with Steven. So Nick does it well, let me tell you.
We spent a lot of money doing that, and I would say most of them I could probably take back and invest it in apartment complexes.
You still wish you'd always done it like 3 times,
but
right?
there was like 35% of those scenarios where I was like, it was so worth it.
Right?
Yeah. So I don't know.
Even just 3 times.
I think I'm making this point very poorly, but
We're
what
just easily
I think-
distracted.
I like this guy.
I think what I'm trying to say is like when you are younger, you can bring value to the world in a non-monetary fashion, and often this is through in like a social way, right? So like a lot I see like a lot of like younger kids, they're like roll into like circles and stuff, and the way they do it is they have like a lot of women, and they can bring like beautiful women places, and then like old rich guys are like, I want to hang out with that kid, he's always hanging out with like 20 girls, right? So my point is like there are ways to do things that are non-monetary that like get you connections, that bring you into spaces that you might not otherwise be in because you're young, and like people don't really care about like what you have to say or things that you've done when you're 21. You kind of like reset your life, you're out of college, you're starting from scratch again, right? So I can see scenarios where in a particular paradigm, like quote unquote wasting money on a car, being flashy on social media, whatever, might actually in some way for you and what you're trying to do bring value in a way that I think is actually more effective than spending money on an apartment that is like marginally better, right? Like nobody cares that you're like, oh, I've got a 2-bedroom mediocre apartment instead of a studio, but some people will be like, I got a Lambo. Like it doesn't actually cost that much more money per month to get like a dumb flashy car with a 1,000 miles per year lease than that. And again, I'm not advocating this as a strategy by default.
I see your
I'm
point.
just saying, like, I can kind of like see
get your-
areas where
I
the
get your-
conventional
I get your
wisdom might
bigger
not
point.
be correct.
The bigger point is well taken.
Yeah.
But like getting a nice car doesn't give you flocks of women either.
I've experienced this at conferences where
no, it does not.
where idiots size up other idiots based upon what watch they're wearing, and it's silly when you talk about it, but it happens, and it's like a quick, I don't know what type of discrimination that this falls in, but it's like a
Type 2.
one type 2 or no one
Well, it's
B.
a games people start playing.
Yeah, they're like,
I heard,
he's successful. So
I heard someone like say like that's their way of indicating simply to others.
I'm good at what I do.
That I exactly. Like I don't even want to have a conversation. Can you just recognize my value based on what's on my wrist?
Yeah, I mean,
Yeah,
fact is, it's true.
We lived in San Francisco for 10 years, and like the richest of all of them would wear a fucking turtleneck to their
Yeah,
conference or
tore-up
a hoodie. And like
Yeah.
the guys who are wearing flashy shit were like laughed out of the room.
Do you think it's a divide between like builders and salespeople? Is that the divide? Like, is it logical if you're in sales to do that, and if you build stuff, it doesn't make sense? But
Sort
like,
of. Yeah. I think, broadly, yeah.
yeah, like because that's what I see, and I think it's not like this is inherently dumb or this is inherently good. I think like this actually, if you're a builder and you're driving a Lambo, and like, then it maybe doesn't make sense, and you're doing something, you're signaling the wrong thing to the wrong people, and it's not, and it's kind of counterproductive. But I can kind of see how it would make sense if you're in that lane, right? And if you're opting for the sort of incremental dentist path of wealth, where you're like, I'm going to save as much as possible, cut my costs and everything, then it's obviously stupid to kind of go out and
I think you're
buy that car.
You're right. That like and we could start talking about like how to get there. But I think one of the biggest leaks is not deciding, early on, like what's your path. I have certain friends who've gone for the hundreds of millions, and some have made it and some haven't. And either way, I love watching them go down that path. I mean, it is amazing to watch, like the amount of grind they have to go, and some are successful, some are not. Some end in like cataclysmic, terrible supernova crashes, but like some of them, do well. It's not for me. Yes. I don't want to choose that route, but it's fun watching people go down that route. So I think, choosing what path is more suitable for you is important. I'd say, initially that the biggest mistake that people often make early on is trading their time for money. And that's okay if you don't have any skills and you need to learn skills, or like I think there's other ways to build your network other than buy things that maybe you can't afford.
Of course,
is to get a job at a company where there's people inside that big company that you can network with in the future. So I think the biggest mistake is trading time for money, but it can be useful early on in your career to build your network, to get some experience, to learn some skills. But in the end, I followed exactly where you fell, Eric. There's two paths, which is you need to own your own business. You need to be an equity holder, or you're in sales. And in my personal path, early on, I was like, I want to be a business owner. I don't know where I got it from. I think my dad was a small business owner, and he's always invested in the stock market. And so maybe I got that, first inclination from him. He certainly told me early on, he's like, son, sometimes salespeople make more than the CEO. And for some reason that quote like blew my mind that it was even possible. And I think it planted a seed. And so, when I was early on, I actually was looking for a sales role on purpose, because I was like, I don't have money to start my own business. And the only way I can earn outsized in my skills and my experience is to do sales and do really well at it. And I had an opportunity where one of my mentors, Misha, gave me an opportunity. He's like, okay, we're going to build this consulting firm together, and any client you bring in, I'm going to give you a pretty large percentage of the revenue. And I took that and was luckily able to run with it and build. There's no way anyone would have given me a salary of what I earned. And for a couple months there, actually, Misha came to me. He's like, I need to lower your commission rate. And I was like, why? He's like, you made more than I did the last 2 months. And, I was in a grateful little shit for about 7 days. And then I realized how grateful I was that he even let me in this position. But, that did happen for a very small period of time. But it did give me the cash, the excess cash, to then start my own business. And I think, at some point, whether that's within your 20s or your 50s, that is the ultimate path for wealth. That is the opportunity that you're afforded to in America and in other, countries. But that is the unique opportunity, and the fastest way I know to accumulate wealth over a long period of time. I'm not talking about like start your own Twitter raise a bunch of money. I actually don't think that path is the way.
Retired dentist wealth.
Yeah, like like I would focus on a business that has a good cash flow cycle that can cash flow with the first 2 years. If you can do that, that's phenomenal success. If you can be positive cash flow relatively quickly and have enough profits to distribute money to yourself within 2 years,
I mean,
that's
I
great.
love the sales, but I'm not a salesperson, right? So like that's something I decided early on. But I hear what you're saying, and I think like that's one of the greatest skills you could build, like as a young person, because one of the problems with like starting a company is that you raise money, you hire people, and then you are tied to that, and you just go down with the ship. If you're like an epic salesperson, you can just leave.
Yeah.
You just go somewhere else anytime you want, and just somebody's
bring a
happy to pay
Rolodex.
you.
Okay, I have a question for you.
Yes.
You're not a salesperson, but in a way, you do eat what you kill because you're sitting at the desk trading, and like you are making money while you're sitting there working, eating what you kill. And I've thought about this for myself, right? So if I'm selling like weekly options, and I can increase my salary by 6 figures by just grinding this out, gritting my teeth, selling options over and over again every week. At what point do I lose the freedom that I actually really aspire to versus like getting the dollar amount that I also aspire to? And where's the happy medium? Do you feel like you are free in this life where you are eating what you kill?
That's a great question. So like one of the things, me and Nick are very different because Nick has started successful businesses and, sold them for money and stuff. And I've started businesses, but I feel like I've never like I've even sold them after like much pain. But like I've never achieved this nirvana that people talk about, where it's like, oh, start a business and eventually you just get this cash flow rolling in. You remove yourself from the business. I've never been able to do that. I've always been terrible about doing that. I was terrible at that in the business world, and then I keep coming back to these jobs. Like people know that like I played poker, trade. And I keep coming back to these jobs where like I don't own my own time. Like I make money when I work. And for a while I was like, this is so inefficient and I hate this, but like I kind of like what I do now. And yeah, to an extent, like I do only make money proportionate to how much I work, but like I'm able to make enough where like I don't have to work 40 hours and I like what I do, and it's cool for me. And like I don't know if I'll ever
I'm guessing you work way more than 40 hours as you're sitting there researching and whatever.
If you count thinking, then yeah.
I mean, the majority of the job becomes like reading and thinking.
But I think, if you're going to go down the path of I'm going to start a business, like we shouldn't, leave out the sacrifice part of this. Like you are committing to a life of like risk of unlimited amount of work hours and sacrifice. I remember when I started my first business, we didn't go out for like a year and a half. I'm talking about not one weekend, one night did we go out and hang out with friends, staying in the
Can I tell a
office.
story about asking you to go to brunch?
I don't remember this, but yeah.
We were like 23 or 24, and I was visiting San Diego. I was staying with Nick. We partied on a Friday night. We woke up on Saturday, and I was like, dude, where are we going for brunch? And he was like, I'm good, man. Like
that notion appalled him.
Yeah, he was like, I'm not going out anymore to spend money on food. No, I'm good. I'm sacrificing. I'm all in. And I was like, wow, this guy's fucking committed, and it worked. Like,
Yeah,
you did it.
Yeah,
but I think that's important to share because people think that they can have their cake and eat it too.
Yeah, I mean,
It's very important.
We joke about that quote. I think Elon Musk quoted it from a friend, but like, being an entrepreneur is like staring into the abyss of a dark hole while eating glass or something like that. And like, I've certainly come to you guys at times, like looking like a ghost, being like, guys, I'm just getting wrecked right now. Or I feel like I'm getting wrecked. And it certainly has those moments, and you have to be okay. And you have to be smart enough with your money where like, I've had years where I've made millions of dollars, and I've had years where I've lost lots of money, and everything in between, from not making money to making some and you have to be okay, like as an entrepreneur, or like what people call a serial entrepreneur. We're just going to keep moving from business to business no matter what happens, whether you sell it or you shut it down, and that's the life you choose. It comes with a cost, and it comes also with discipline. Like when you're up and you're doing well, you have to realize I'm doing well, and that doesn't mean I can go spend my money on a car or whatever. Like those are the times to like shovel them into the investments that will hopefully replace your income in the future. But yeah, I would say like I did a talk in front of college students one time, and I blatantly told them, it was an entrepreneurship society class. I said, most of you should not become entrepreneurs because it is not
100%.
always the happiest route.
People assume it's a path to freedom. I did. It's not. It is not a path.
Especially when you're in grind mode, which is the first 2 to 3 years of the business. I can't see a way out of that.
You hate having the boss so much that you assume that if you go off onto your own, you'll have freedom. And to a certain degree, you do, but you're exchanging one thing for another. But I think your story, Nick, is super fucking cool because it's about uncovering principles, determining what they are, creating a set of rules within or principles that you then follow no matter what. No, I'm not going to go out to eat as an example of just one of those many principles, and then executing until the point that a pivot or a restart is required, and milking and cashing that cow as much as possible along the way. Like, that's what you do. That's how you build businesses that like generate wealth. And then sometimes you sell them, sometimes they just generate cash. There's many paths, but equity is a great play. I'd like to go a little bit deeper. I know we're already deep in this episode, but I think we should go a little bit deeper and share a little more on the how. So there's a couple things that come to mind for me that I've been wanting to share and ask from you guys as we talk, and a bit of a synthesis as well. So some of the things that I've pulled out of everything we've talked about is like, we all commented on like, that's a good form of wealth and that's a good form of getting rich, but that's not a good form of getting rich. I think ultimately what we're saying and what it comes down to is that everyone has a different definition of what the rich life looks like for them. And the goal at the end of the day is to make money. Money is a tool, and it provides different things for different people. For some people, it provides time. For other people, it provides, like, we have friends that are like, all I want is the fucking jet and the fucking yacht, and I want to have a great grand old time in the Cayman Islands or in Croatia for Yacht Week for the rest of my life. And I'm going to need to generate billions of dollars throughout my lifetime to make that happen. Great. Okay. That's your version of it. So there's no like admonishing anybody for their version of wealth or freedom or rich. I think that's very important to say. The next thing is that I think we highlighted, like, Eric, your story is really interesting in the sense that what it makes me think about, and the reason I brought it up in the first place, is because a lot of people have money trauma. And I think the reason you sharing is really powerful is because you don't have that money trauma to the same degree that a lot of people do. I think I have some money trauma, and growing up the way that I did, where people had to show up to our doorstep and like give us food sometimes for Thanksgiving, has an impact, and it puts me in a state of like fear. And even when I have money, I always think I'm going to die sometimes. I'm like, it's all going to be taken away from me, and I might be rich on paper, but I'm one bad move away from a really, really, really scary situation. And so what that does to a person's character is that they create belief systems that can either enable them to make more money or get in the way of them making money. So for me, maybe it's a little bit of a cop-out. I know it's the left turn I always take, but like, I think that the game toward getting rich as quickly as possible is actually an inner work game before an outer work game. So there's all these strategies that we've talked about, and maybe there's a few more we can mention. But like, until a person does the inner work of understanding what is blocking them from receiving money in the first place and or generating it, I don't think they're going to get anywhere. I think you can fall into, you probably all know people that are very good at making money and very good at losing it. I'm not one of those people, but I'm sure you all know somebody like that. And there's some kind of money trauma there.
Yeah, I was like, I know that guy.
There's some kind of money trauma. And I'm thinking of somebody that you and I know, and a few people that you and I know. And
guys, I'm right here.
Well, no, I'm not even. I'm not even.
right
You can speak for yourself. I'm not thinking of you. And these people are absolutely fantastic at making money, and then just have this like incredible ability to not like lose it on purpose or anything like that, but they spend it just as willingly as they created it. It's almost like this magical manifestation ability that they have. And what they've actually done is they've created a roller coaster for themselves that is rooted in a roller coaster that they were in from a long time ago. But they haven't done the work to realize that the roller coaster is the thing that they need to work on, and that actually they might benefit from like a little bit of stability in terms of their approach to making money. And maybe getting rich slowly would actually be better for these kinds of people instead of like shortcuts to make money.
So you guys had asked me maybe why I have a healthy relationship with it. And I was doing some thinking while you were talking. And what I realized, like, if you believe that perception is reality, which I kind of do in a lot of ways, I went to this like rich private school where like some kid was like flying in on a helicopter to go to school in the morning and landing on the 50-yard line to come to school. I went like on my basketball team was the owner of the Lakers and like the owner of the Chargers was like on the football team. So like this school within this circle that I was in, I wasn't rich. So I think I took on sort of this like identity as like, I'm getting by here. And I think that just kind of like stays with me, even though like on a grander scale, that was never the case.
What you have that I won't say I wish I had, because I'm happy with who I am, but like something that I've admired and seen in you is like there's a sense of peace and comfort with where you're at. Like there isn't this like sabotage, fear mechanism that exists inside of you. There's a sense of security, and like no matter what that's not fair language either. I've worked very hard to develop a sense of security, because the sense of security is what allows for creativity. And until a person has that level of security that they're not, the end of the world is not near, that the worst case scenario is not that bad, they actually can't create from a very good and healthy place. So you end up creating from a place, you start your business out of a place of fear, out of a place of scarcity, where you have to make it in like 3 fucking months. But a healthy minded person who's worked through a lot of their money issues is like taking a very logical, rational like approach to the idea of starting the business in the first place.
I think
you might even notice about me, like at times, like there's a maniacal, like, I need to do so much in one day.
Yeah.
Like, where does that come from? Like, it
really
is
the core
a
of it,
deep rooted thing that I have to check every goddamn box I possibly can in the day. And that's tied to the money thing,
and
actually.
I don't think a lot of people talk about this, but I think the real privilege that I enjoyed is that peace of mind, knowing that I could start a business, even though the safety net will always be there. Like if I fail miserably, that like I can not die and, just rebuild again.
It's the same for all of us. We just have to work on, like, we're all going to be okay. It's just that our upbringing changes our perception of reality. Like we'd actually all land in the same place. People haven't done that work to realize that. That's all.
I feel like I'm never going to be okay.
Oh, Steven. I'm going to change your name
He's
to
in the
Steven
trap.
Drama Cesaro really quickly. Really quickly.
I mean,
You're fine.
yeah, I'm fine, but like I'm like you, where like I have this little voice in my head that's like always like, oh my god, I'm gonna be poor, like all the time.
Totally.
Like, it's just like
No, I know what you mean, man.
and it's like a driving thing in my life. I'm trying to think back to what the inflection point was for me, where I decided I was gonna like opt out of that, and I guess for me it was like discovering poker, and I just ran the maths on this. I'm like, oh, I can take this path. I can opt into this thing. I'm going to make this much an hour. Then I'll get a raise. I'll make this much an hour, this much an hour. And it's going to be like 27 by the time I get to the point where I hit some inflection point where I'm like, okay, I've been promoted and done this. And I was like, or I could just like eat this kind of pain, because it was pain at the time, of being like, I'm going to risk the very little money that I currently have and just eat this glass, as we say, and just deal with that. And I think this is like the better thing for me when I'm younger. I think when you're younger, like you typically do have 2 choices, right? You can choose the path of entrepreneurship and pain and uncertainty, and that world will just reward you on the basis of what do you do, or you opt into the sort of like ladder path of corporate, right? Like there's very few areas where you can bust into the economy and you're like, I'm 21, I'm a wonderkind, like just pay me $900,000 a year. It's like everybody's gonna be like, go fuck yourself, like you go to the mailroom,
Back of the line.
yeah. Like, because that's just the way that works. So that was my inflection point personally, and I did that. Once I did that, I was just like, oh, I like taking risks. I like the pain. I like the threat of losing everything, but it's fine. I mean, maybe I don't like that, but I like the opportunity. I like always seeing that little like rainbow at the end of everything, and that keeps me going, even if like I'm undergoing pain right now. And that was just natural for me. So I'm like curious, like because you had a job at Google first, right?
Yeah.
And then you did like, I did the salary thing for a little bit. Like I worked at Bridgewater for a little bit, and that wasn't like a normal job, I guess, but like still to me felt kind of corporate, and I hated it. And I was just like, I have to get out.
It was similar to you, similar to Nick, where it was like always wanted to be a business owner. I have a weird, job history. Like I started working like under the table, like by 8, 9 years old in my neighborhood. Then by 14 years old, I got a special permit just to work at a snack bar because the legal age in California at the time was 15. Then my first actual legal job was at a roller skating rink. And then I've worked ever since then in every industry you can imagine. And I guess it was like my way actually toward like freedom. I wanted to make sure I could like put money in my own pocket, take care of myself, not go through what I'd gone through for the prior 15 years. And it's always been this like go, 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 put shit and on your back and go. And then, did the school thing and went to Google, actually 3M first, then to Google. And then was like, okay, I am not made for this. Like I am way too radical for like a job and like work environment. Like everything I say and do is just like too much for these people. And while on the one hand I was being like praised, I was also being like admonished for like being too much. So yeah, started doing the equity thing and getting equity in companies and building my own companies with that, from scratch. Or actually, I mean, for me, I would say like a lot of my wealth, I know we talked about trading time for money, but like I have made, I don't do this anymore, but I have made a lot of money trading time actually, because when you get to a point where you can charge $1,000 an hour, it gets pretty good. It gets pretty damn good.
Can I ask all you guys a question? Because like you're talking about your trauma with money, you're talking about your level of being sort of like insecure today even. My question to all of you guys is like, do you have a number in mind? Like we're talking about wealth, we're talking about rich. Like, do you guys have a number in mind where you're like, I don't have to worry anymore? Or are you going to continue living this chip on your shoulder life that's always going to feel a little insecure? And is that going to stay with you forever?
I have a number, but it's not like the grand number. It's like how much per month in passive income
it's
do
the
I need to
50-yard
hit?
line.
And like, I'm like, okay, here's how much I spend now. If I have kids, when I have kids, and people think in retirement that their, spending goes down, but it actually goes up because you're not spending 9 hours in front of an office, not spending anything, doing any activities. So like, I was like, okay, well, what if I took a 30% premium on what I make now? Okay, that is my monthly target. Plus on top of that, like 18 to 24 months of cash that will last me in case those income sources, whatever reason, we have a dark recession and they don't start spitting out, cash for a long time. So mine is not like, I don't really have like a total number. But to me, it's like how much passive income can you make? Because I'm in the camp of like time is the limited resource. And so you want to optimize for more time and more freedom in time. And that's how I've kind of operated. So it's not like 10, 20, $30 million or anything like that. It's
Yeah, I'll go.
Yeah.
It's got a hell of an algorithm behind it.
Yeah.
To answer your question, I have a number and I've made it very clear to myself to make sure that once I hit that number, everything else is just a cherry on top.
Sort of remind yourself when you
It's
get
very important. I've written it down like 1,000 times.
because
like,
it is easy to move the goalposts once you get
I'm
there.
making
it's
sure I
almost
will
guaranteed.
move the goalpost.
That is guaranteed.
but it will truly serve as life enhancement, little cherries on top of whipped cream for me.
Yeah, I mean, I do have a number. The problem is it keeps moving because life keeps changing, right? Like a good example of this is real estate. Like when I moved to California, I was doing pretty good playing poker, and I bought a house. And at the time, I was like, oh my God, I just spent so much money on this house. I bought like a 4,000 square foot house in PB, yard, everything, beautiful house. It was like 1.5 million. At the time, I was like, oh my God, I have just wrecked myself, right? Now, that's like a reasonable apartment downtown. And if I still had that, I would feel very, very, very great, right? Like this house we're recording in now costs way more than that house. And it's a fraction of the size of it. Like, so I keep thinking I'm going to be okay here, but then like the goalposts of all the things around me move. And like the reality is like, I feel like I don't superfluously spend money right now. I feel like everything I spend money on does give me a lot of value. And I still see things that I could spend money on where I could get more incremental value. and I'm okay with working, right? And I'm okay with like getting that incremental value, right? So in my head, I'm like, I want to have like 50 times my annual expenses of like just good value stuff. Like, and that's like my number that just keeps changing all the time because the world is crazy and it's chaos and it's a moving target. And then you get older, you're like, well, I'm going to be married. Maybe I have a kid. Maybe I have 2 kids. Maybe I have 3 kids. And then you're like, okay, maybe this kid wants tennis lessons and music lessons. Maybe he needs to go to a public school, private school now because the school. It's just so every time I'm like, I want a number. Like 2 years later, I'm like, oh, that's cute, and I like pat myself on the head. So I just like don't think about it a lot anymore in terms of what the exact number is, but I just think of it in terms of like the utility versus sort of like the risk-free rate and how much cash flow it can get me, and that's like a forever moving target. So I just like.
What number do you apply to like this is how much cash flow can get me? Mine is 5.5%.
That's like about mine. 5
Okay.
is like what I
5.
use in my
Okay.
head. I think I can get 5. They can get by in that. I think that's safe. So yeah, that's my benchmark.
I think
personally.
that 4% rule from the FIRE group is kind of bullshit, to be honest.
Yeah.
How so?
Well, because they're like, okay, well, you need to have basically 25 times whatever you're currently spending now, and then you can retire. But a lot of them are like, well, that includes dividends from stocks, other things. And I'm like, well, those are taxable still. So your 4% might turn to 3% or 2.5%.
Do they not factor in taxes though?
I don't.
Seems like a gross oversight if they don't.
In a lot of these, I swear I've read a lot of these stories, and I don't believe they do. And so 4% doesn't seem to be nearly enough. So I think that's kind of BS. I think
Gross.
25
Gross.
is.
Is there a book called like Die with Zero?
I don't know, but that sounds good to me.
Yeah, I've heard of that sort of ideology.
I think
Heard
that
that idea.
I think that's kind of a good philosophy. I feel like it's die with 0 plus like let your kids have a small amount of breathing room,
Really
but enough to
small.
give them like just enough to give them a kick in the ass, but they're not going to die in the street.
It's more like a thank you.
I like
Yeah.
Warren Buffett's quote on that on like inheritance. He goes, "I want my kids to be able to do something, but I don't want them to have enough that they can do nothing."
Ooh, Buffett wisdom. I like that.
Yeah, he's also going to give them like a couple $1 million probably.
Oh, $1 million, $1 million,
$1 million?
$1
He's
million.
only giving them 1 million.
But what age
That's
can they
plenty.
access it?
That's plenty.
more than anybody else gets.
That's
I think it's like if you want to
plenty.
give your kids money, that's fine. Give it to them at age 35.
I'm not giving $1 million.
You're going to give them some skills.
No, I'll
You're going to be like,
probably give- I'll
here's
probably give them.
7,000 episodes
Probably
of the
give
Alfalfa podcast. Study up, motherfucker.
Dude, we got to pump those numbers up if you
Invaluable.
want to get
Invaluable.
7,000. I think we should work toward wrapping this up.
Okay.
And I just got an idea. Hopefully you guys are down. I thought we should just, since this was such a conversation of so many subtopics, I just thought we could maybe end with like one fire, no pun intended, tip on how to get rich quick.
Nick, you're on the spot first.
I'll
Go.
go. I'll go.
Go ahead.
Okay. So, number one thing a person can do to get rich fast, I think, is develop the most unique skill set you possibly can and get or create equity in as many companies as you possibly can with that unique specialized skill set. And don't want to sit here and regurgitate a lot of what I find to be like a compilation of great wisdom, which is Naval's work of compiling the great wisdom around wealth and becoming rich. So I would read, I would look into Naval Ravikant's work and just read the book, The Almanac of Naval
The
Ravikant.
Navalmanac?
Navalmanac, because I think that he synthesizes this very well. And talks about a lot of the things that naturally came up today. But for me, it's like what has made me the most money is having very unique skills that I can charge any amount I want and or allows me to create anything I want, and then having as much equity as possible in as many businesses.
Nice.
Yeah, I'd say like outside of, starting your own business, find a role where you can earn outsized earnings of your experience. And so that's in sales, but it also for most people could be getting a job at a publicly traded company that has good growth prospects. Most jobs, even the lower end jobs, come with some kind of stock options or equity, and that is most people's path to wealth. And then when you do have extra cash, stop investing in individual stocks. either go an index or find a way to learn real estate and use the power of leverage and tax advantages in real estate. And I think those are the, few ways. And then if you want, like we've talked about different buckets in the Discord, like if you want, section out a piece of your savings bucket to let it YOLO and
Are
like.
you going to say crypto? Because
That's
crypto
what I was
has
gonna
not
say.
been fucking said
That's
this
what I was
entire
gonna say.
episode.
Why did you say it?
That was mine.
I had a good streak.
I was just to say, like, once
It's time
you
to
fill
say it.
once you fill that bucket and maybe your long term retirement bucket, your brother actually comes to mind is his equity. Well, then the rest of the cash, like especially if you're in the younger side, you take risk. Let it rip. And I think ETH would be our for those who are not sophisticated enough, would be our weapon of choice.
Squeeth.
Yep.
Let's go full send.
Yeah.
Crypto CFA. Spend less than you make. Take the excess. Put it in crypto, specifically ETH. That's it.
Wow.
I think that people want to make money to be happy, but I think that people don't think about what it means to be happy. And so what I think most people end up doing is they take money and they try to be happy by like buying things, and they're sort of just buying dopamine hits, and then their capital is recycled in a way that is not very efficient or effective to them being happy. They just keep buying dopamine hits at the dopamine slot machine, and they spend a lot of money like that. So I think a good step to people would be to take a step back and think about what happiness is. How can I be happy? What is enough? What do I really need? Because I think if you don't answer that question first, then all the money you make just kind of goes to filling like a never-ending void on the dopamine slot machine. And I think that's what most people do, and they'd be better off kind of working backwards, I think.
You surprise me every day.
Oh, thank you.
Yeah, that was lovely. That was really, really lovely. That was wonderful. Personally, I feel like we could talk about this topic for another 4 hours. There's so much like within the topic of.
What do you mean? It's
how
what
to
we
get
talk
rich
about every
quickly.
day when we're not have
We
a
do,
microphone
but
in front of our
there's
face.
just no. I mean,
We'll
on
bring
the
it
pod.
back around
On the pod.
in 6 months or something.
So if you enjoyed, let us know. If you want more of this, let us know. Obviously, we went long, but we're cutting it short, and we'd be happy to do a part 2. Love you guys. See you in the next episode.
Adios.
Peace.